Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast. Good morning. It's Friday, the 1st of August. I'm Caroline Hepker in London.
And I'm Stephen Carroll. Coming up today, Donald Trump announces new tariff rates for every country trading with the US as his deadline for talks passes.
Apple reports its fastest growth in 3 years, but tariffs increase the company's cost of doing business.
Plus, trading from a theatre seat, how an options trader is turning finance into entertainment.
Let's start with a roundup of our top stories.
US President Donald Trump is stepping up his global trade offensive, setting a 10% minimum global tariff and higher rates for countries which have trade surpluses with the United States. The president signed an executive order to enact many of the tariff rates he first announced in April, then delayed twice. White House spokesperson Caroline Leavitt says the pause has led to America's key trading partners getting better rates.
We promised that the president would negotiate with countries all around the world to cut tailor-made trade deals depending on those countries' challenges, how badly they've ripped off the United States of America and our manufacturing industry and our workforce in the past. And he has done that. Of our 18 major trading partners, 2/3 of those trading partners have a deal.
Leavitt was speaking ahead of the midnight deadline, which passed without the fanfare of Trump's April tariff rollout. The changes will come into effect in 1 week's time. Imports from around 40 countries will face a higher 15% rate, and roughly a dozen economies' products will be hit with even higher duties. Switzerland is one of the worst affected by the new measures, with the country facing a 39% levy on its exports to the US. Major industrialised economies, including the European Union, Japan and South Korea, accepted deals involving 15% duties on their products.
Well, the tariff rollout also underlined how the US president is using trade to pressure countries politically. Some of the major shifts from April's rates are countries facing Donald Trump's ire. India has been hit with a 25% tariff rate after attacks over its membership of the BRICS group. And before the midnight deadline, the US president was asked about his social media post saying that Canada backing statehood for Palestine would make it very hard for them to get a U.S. trade deal.
That's their opinion. I didn't like that. Not a deal breaker, but we haven't spoken to Canada today. He's called, and we'll see.
President Trump later announced a 35% tariff rate for Canadian imports not covered by the USMCA, the current trade agreement. Many countries are still hoping to negotiate better deals with the US, with Mexico managing to get a further 90-day extension to trade talks.
Bloomberg Economics forecasts the new trade regime will cut US GDP by 1.8% and lift core prices by 1.1% over a period of 2 to 3 years. They say the full details of the new levies will increase the average US tariff rate to 15.2% when they take effect next week. That's up from 13.3% currently and 2.3% last year. But economists have warned that further possible announcements on new sectoral tariffs, notably for pharmaceuticals and chips, could substantially change their prediction.
Traders are bracing for an influx of copper into warehouses for the London Metal Exchange. President Trump's decision not to tariff the main traded form of the metal has sparked a race for LME storage space. It comes after traders had, for months, shipped copper to the US and built up stockpiles to capture sharply higher prices. Here is Bloomberg anchor Romain Bostic on how the market was caught off guard by the US tariff shock.
The market had actually tried to call the president's bluff. They actually thought he was going to follow through with most of those tariffs, but he's basically rescinded a couple of those and said that they won't apply to finished products. And that is disrupting a big trade that we had in this market, Joe, which was a lot of folks trying to buy a lot of copper ahead of those tariffs. That's what got built up over the last few weeks that now, in theory, is going to have to be built down because what folks bought, in theory, is now going to be worth a little bit less.
Bloomberg's Romain Bostic speaking there. On Wednesday, President Trump announced that import tariffs of 50% would apply only to processed forms of copper, not to the refined metal. The news collapsed New York prices in a matter of minutes.
A key gauge of US inflation increased in June at one of the fastest paces of the year, while consumer spending barely rose. The core personal consumption expenditure index rose by 0.3% from May and 2.8% on an annual basis. Meanwhile, inflation-adjusted consumer spending just edged up last month after declining in May. Lael Brainard, former director of the National Economic Council, says the figures are concerning.
We've already seen substantial slowing in the second quarter in terms of underlying private domestic final demand. Consumers look like they are feeling a little bit cautious. We can see that even in today's personal consumption expenditures data, which really was very modest growth. So yes, I do believe there's some risk.
Lael Brainard speaking there. The Fed kept borrowing costs unchanged for a fifth straight meeting on Wednesday, though two governors dissented in favour of a quarter-point cut.
Apple reported its fastest quarterly revenue growth in more than 3 years, surpassing Wall Street estimates after demand picked up for its iPhones and products in China. The tech giant reported sales up by 9.3% to $94 billion in the third quarter, as CEO Tim Cook hailed a, quote, acceleration of growth around the world. Bloomberg's Mark Gurman says that while US tariffs have increased Apple's business costs, they've also had a positive impact on sales.
Revenue growth of over 1,000% in some stores because people were flooding the stores to buy phones because they thought the prices were going to shoot up. There were these completely baseless headlines on social media saying the iPhone's going to cost $3,000, a US phone's going to cost $100,000, all these complete nonsense headlines. That helped Apple out a lot. We'll see what this means in the quarters to come, but at least for this June quarter, the proof is in the pudding.
Bloomberg's Mark Gurman speaking there as Apple told analysts that it's open to further acquisitions and looks to increase investments in artificial intelligence.
Meanwhile, Amazon shares fell by over 6% in after-hours trading after it projected weaker than expected operating income and trailed the sales growth of its rivals in cloud services. Operating profit in the period ending in September will be between $15.5 and $20.5 billion, compared with the average estimate of $19.4 billion. Despite record capital expenditures this quarter, investors are searching for signs that the tech giant's huge investments in AI are paying off. Bloomberg's Ed Ludlow has more.
The vast majority of revenue that Amazon books and will book in the current period comes from Amazon.com. But AWS, which is the number one player in the cloud market, makes up the vast majority of operating income. And following in quick succession from Microsoft and Meta's prints just 24 hours before, where they showed really demonstrable growth based off AI-motivated CapEx investments, Amazon just didn't have the same thing to show.
Bloomberg's Ed Ludlow speaking as Amazon CEO Andy Jassy said it was very early days in artificial intelligence and efforts to lower the costs of running AI applications would draw more customers over time.
Now to the UK, where business leaders are feeling pessimistic about the economy, according to new data. In fact, that shows that current sentiment has fallen to even lower levels than during the pandemic. Bloomberg's Tiwa Adebayo has more.
During the coronavirus pandemic, the country shut down, experiencing multiple periods of complete lockdown. But still, British executives felt more confident about the UK's economic prospects than they do now. A new survey from the Institute of Directors shows their measure of economic confidence plunged to -72 in July. That's worse than the -69 recorded in April 2020, after the UK first went into COVID lockdown. That survey may concern Prime Minister Keir Starmer, whose Labour government has put economic growth at the heart of its mission. In London, Tiwa Adebayo, Bloomberg Radio.
And those are our top stories for you this morning. Looking at the markets, we see a global stock sell-off extend into a sixth day. You've got the MSCI Asia Pacific Index down 0.7%. Big declines for South Korea. The Kospi down by 3.6% this morning. You also have the Swiss franc lower 0.2% against the US dollar around this 39% tariff rate that's still being questioned by Switzerland itself. And then thinking about stock futures for Europe. Again, we see a significant decline for European expectations, so we're down by 0.5%. 10-year Treasury yields at 4.38, flat ahead of the all-important monthly jobs data that we'll get out later today. Those are the markets.
In a moment, we'll bring you more on the latest trade announcements from Donald Trump. Plus, we have a great story about the live shows selling complex investment strategies to retail traders. But another story that we've been reading this morning about venture capitalists and their foray into podcasts, which has become sort of its own media industry.
Yes, it's become something of a mini empire, actually. Bloomberg's Anne van der Meij has been writing about this, a media ecosystem that serves the tech world. It's podcasts, it's also newsletters, streaming shows, so 20VC, Sorcery, TBPN, the Dwarkish podcast. They kind of sprang up during the pandemic, of course. But now, some of those podcasts, apparently, I haven't listened to all of them, but Anne clearly has, says that some of them are genuinely illuminating, others are pretty boring and sycophantic, but this has actually become a real source of information for the tech sector.
Yeah, I mean, look, it's an ecosystem that is developing in some places, but is attracted particularly large audiences in the tech sector as well. They're very long as well. I mean,
yes,
2 p.m. is 3 hours a day.
Wow.
Done live. The development of this, of course, is interesting because does appear to be the philosophy that as tech gets more powerful, the insider gossip is what's attracting people to these industries as well. I mean, obviously, the number of my friends that love to joke that I'm just another man with a podcast is sort of plays into the trope that this is a lot of very male-dominated conversations as well in this space too. But it's a very interesting deep dive into, I suppose, how this is evolving and attracting audiences.
Yeah, it absolutely is attracting audiences. But of course it doesn't, and Anne points this out too, it doesn't have kind of in-depth reporting. These are chats and conversations. So as you say, it's kind of insider gossip. But yes, they do seem to be really taking off. People are investing in them too within the tech world. They've sort of become their own tech businesses. So yeah, quite interesting.
You can read more from Anne van der Meij on that. We'll put the link to the article in our podcast show notes. Let's bring you more though on the trade news this morning. Donald Trump announcing his reciprocal tariff rates, which start at 10%, but have some unpleasant surprises for the likes of Switzerland and Canada. Our trade czar Brendan Murray is with us for more. So Brendan, it is the 1st of August. The date that Donald Trump had promised us was the end of trade talks. And these announcements coinciding with that, 10% baseline, more for some. What are the big changes in this announcement?
Yeah, so this is really the beginning of the end of the global trading system as we've known it for the past couple of decades. The President's trade representative, Jameson Greer, said that this is going to accomplish what the World Trade Organization hasn't been able to accomplish for 30 years, and that is to expand access to markets for U.S. exporters, to increase tariffs to defend critical American industries, and to create manufacturing jobs through investments that these countries, some of them already, have made in American businesses. So there's a lot of moving pieces here. There are some negotiations that are still going to play out. You mentioned Switzerland. Switzerland thought it had a deal on the president's table, and they obviously didn't get that over the line by today, so they're gonna face this 39% tariff if they can't figure something out between now and the time they take effect on August 7th. So and Taiwan, I believe, also thought it had a deal and wasn't able to, and is getting handed its tariff rate in this directive from the president as well. So there are lots of talks. This isn't the end of this. This is sort of the beginning in many ways. There are lots of talks that still need to play out, even for those countries that think they signed a deal. There are details still to be worked out. And this is going to be a tumultuous time for the global economy. Can you imagine being, in the back office of a major importer right now, trying to figure out the paperwork for all this? It's gonna cause a lot of headaches and a lot of extra costs.
Yeah, and still quite a lot of disbelief. Is this the US abandoning kind of open trade for good or not? And there are still lots of details that we don't know, like the rate for China isn't on the list, and there are also the sectoral tariffs. What do you think is the most important thing to watch out for next in terms of detail as we try to absorb all of this?
Well, definitely the China truce that expires on August 12th is something that is hanging out there. Will that be extended? The president was supposed to be briefed by his Treasury Secretary and Trade Representative this week. We don't think that briefing has taken place. The president was supposed to make a decision on whether to extend that, and all indications are that he will, but he hasn't yet. So it's just another uncertainty hanging over the global economy. And of course, the U.S. and China are huge trading partners, and there's a lot at stake for that to remain a stable situation and not escalate back to where they were just a couple of months ago with 145% U.S. tariffs on Chinese imports. So the other big thing to look out for here is whether countries will retaliate in any sort of way, whether directly or indirectly. It's quite interesting that these tariffs are being handed down and countries don't hit back in any way. But there are other ways to do it other than just directly put tit-for-tat tariffs on the U.S. They can try to diversify their own trading flows to outside the U.S. market if that's possible. And we're in for some interesting times here in the global trading system.
Yeah, we certainly are, Brendan. And just looking at the latest reactions from the Swiss government saying the 39% tariffs differ significantly from a draft, and they're still seeking a negotiated solution with the US on trade. Taiwan, meanwhile, calling the 20% tariff that they've been handed temporary and saying they're striving for a more reasonable rate in the future as well. So perhaps some more space for talks before those new tariffs come into force in a week's time. For now, our trades are Brendan Murray. Thank you.
Well, it's finance as entertainment. Maybe that's the theme of the podcast this morning. 68-year-old Tom Sosnoff, the founder of Think or Swim and tastytrade, packed out a London theatre recently to teach complex trading strategies that were once reserved for Wall Street pros to retail investors. Joining us now to discuss this is Bloomberg's markets reporter Justina Lee. Justina, good morning. So financial entertainment, what is Sosnoff's teaching? I mean, you were at the theatre show. What was it like?
Oh, it's a bit like a stand-up comedy, but maybe with fewer jokes and a lot more, discussion about all these complicated option strategies. And I think what's kind of really interesting about this company that he co-founded, tastytrade, which is a retail brokerage and also a financial entertainment network, is that they're not just about kind of buying options. I think we're used to that. They're mostly about selling options. And they're about these complicated strategies, short iron condor, short strangles, which are usually like selling options and maybe buying some at the same time, selling two options at the same time. And they're all about how kind of if you do this steadily, you'll kind of make kind of these premiums from selling options, a bit like if you're selling insurance, and then you kind of get rich this way. And so it's kind of interesting because it's a combination of entertainment and also really dry technical language. And that is exactly how Tom Sosnoff kind of envisioned his company to be.
Why is he attracting such audiences at this moment? Why is this kind of trading, I suppose, becoming so popular now?
Yeah, I think he kind of really captures this moment in the retail options trading boom. I mean, U.S. options trading volume, and it's also interesting because this was in London, but everyone was trading U.S. options there. I mean, the volumes have really reached a record. And I think it's interesting because we used to think, okay, people were trading options during COVID when they were bored, but actually the volume has picked up even further since COVID, and it's just hitting new records every year. And I think, they're not even among the biggest options trading brokerage. And even then, he attracted this big crowd in London, and a lot of people there actually flew in here just to see him. And it kind of, when I spoke to them, I think a lot of them liked that he seems to be teaching something that's a little bit cleverer than what, I don't know, they might learn from Robinhood or something. And there's definitely kind of aspirations for kind of being able to do this full time and kind of quit their jobs and kind of just make a living from trading options.
Okay, but what are the risks and some of the criticism around this? I mean, there is a difference between, I suppose, Wall Streets and big banks and trading there versus trying to do it in your basement.
Yeah, for sure. And I think, we have all heard that as a retail investor, including us, we should all just buy and hold index funds. And that is something that Tom Sosnoff definitely does not agree with. He thinks, actually, his company recently had an article that called this anti-intellectual. And I think even, a lot of Wall Street pros would say selling options is something that is quite dangerous. It's a strategy that has kind of burned a lot of pros. And to kind of teach these complicated tactics to retail investors, I think a lot of people would say it's not really just about them. It's kind of about generating commissions for the brokerage, because the more complicated these trades are, kind of the more activity you get. And of course, for each trade, tastytrade does earn a commission, and then they also sell the flows to market makers. And so I think a lot of cynics would say that this is really just a commission maximization strategy.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.